All right, so what is a 457 retirement plan? You've probably heard of 401ks, you've heard of IRAs and things like that, but what is this 457? Does it actually apply to you? Are there benefits that are better than a 401k? It could be worse than a 401k. Are there other options besides this? I want to dive into those details right now and give you my standpoint on what's good about it, but also what you could be doing that's better. All right, so let's define what a 457 retirement plan is. Now, if you're looking this up right now, it's either one, your financial advisor and you just don't know what they are or something like that, or maybe you heard about it, or two, maybe you're being offered that option right now. Now, a 457 retirement plan is really only available for two kinds of employees, either government employees or employees of something that's more of a nonprofit or something that's that kind of thing. It could be like a charity, a church. It could be like a hospital even, if it's more of a nonprofit hospital. And so it's really only available for those specific employees. Now, you might be thinking, well, I'm a teacher. Well, teachers may not get this offer. You might get more like a 403B or something like that, which is fine. I mean, that's another similar type of retirement plan, but a 457 is usually for government workers or for those that work for nonprofits. Now, there are some advantages to this or some disadvantages. Very similar to 401ks, it's a retirement plan that's deferred retirement, it's deferred income, so you don't pay taxes on that money going in. But when you pull the money out, yes, you do pay taxes. Now, the one big benefit that you get with a 457 that you do not get with a 401k is that there is not this 59 and a half rule, right? There's this age 59 and a half rule you get with 401ks and IRAs, even Roth IRAs, that say that if you pull out the money before 59 and a half, you will be penalized with a 10% penalty. Now, that's traditional retirement plans. For 457, because governments will allow people to retire at different ages, even sooner than later, they actually do not have this 10% early withdrawal penalty. It's whenever you get to retirement, you're able to pull that money out. Yes, you will be taxed. That doesn't change, but you don't have to worry about these early withdrawal penalties. So if you decide to retire at age 55, you're set. There's no issue with trying to wait till you're 59 and a half. You're okay. So that's one huge, huge advantage. They also give you some advantage for doing catch-up contributions, especially if you're later in those years, getting to retirement. They allow you to put in a little bit more money there. But for the most part, they're kind of just the same general rules as every other qualified plan when you deal with 401ks and IRAs. But I would really say the big advantage, of course, is that you don't have that early withdrawal penalty. That is, I think, the biggest advantage. Now, there is a disadvantage to a 457 plan. The one disadvantage you have is, unlike 401ks, if someone sues you, if there's any kind of liability aspect that way, your money's protected in a 401k. 457s are not protected if you work for those nonprofits, like the hospitals, the charities, or churches, those kind of things. Now, if you work for the government, it still has a protection on it. That's the good news. So if you're a government employee, yes, it's still protected like it is with a 401k. But if you work for those other nonprofit entities, or maybe you own maybe one of those companies, maybe you own a nonprofit and you've been thinking about setting up this plan for yourself, just know that they can get to your money. That if you are sued and they win, that money can be taken out. You may be forced to liquidate it to pay off that judgment. So be very, very careful when you're looking at setting up your own plan. But again, if you're a government employee, again, I would assume you don't own the government unless you're the president. And even then, you're not owning the government if you're president either, right? So if you're a government employee, it's okay. You know, the plan's already set in place, it's protected, and there's some good advantages to it, of course. Now, here's the thing. Here's the general disadvantage of all these retirement plans. Is one, these rules can change at any time. So even though I'm telling you this at the end of 2024, it's very possible these rules could be different in the future. So it might be a few years down the road, you're watching this video, you might say, well, Chris, you're wrong because now they do have an early withdrawal penalty, or now they actually do this, or they tax here, or now this age limit's here, now it's 62 and a half instead of 59 and a half. I get it. Like, the rules can change at any time. That to me is one of the biggest risks that I see with any kind of qualified plan, like 401ks, 403bs, 457s, IRAs, Roth IRAs. The rules can change at any time and you have zero say in the matter. So what I get, a lot of people will say is, well, where can I store my money where it can be safe? You know, where can I store my money that maybe if the rules change, I'm not affected? Well, one place that I like to go is, of course, go to the places that other politicians have their money, right? Now, politicians, a lot of them have businesses. So businesses are a great place to be able to minimize taxes. You can definitely get great advantages by being a business owner with protection, even separation of liability by having LLCs and things like that. So having a business can be a great way to help create a little extra barrier of protection for yourself too. It also gives you some good tax breaks that you would not get with any qualified plan. Remember, any qualified plan you do, 401ks, IRAs, even 457s, you're not paying taxes up front, but you get taxed later. There's zero tax benefit. This is the one thing that drives me nuts, that there's CPAs out there, accountants that will tell you, oh, if you want to have tax benefits, put your money in a 401k. Put your money in that 457. Well, here's the problem. There are no tax benefits. You still have to pay down the road. And the real question is this, is do I trust the government to actually have my best interest at heart here? Now, I do believe that most government officials want to do what their constituents want, because obviously they want to get reelected. They'll at least tell you they have your best interest in mind. But just know at the end of the day, it's always going to come back to how are we going to pay for taxes? How are we going to do this? How are we going to do that? We're going majorly in debt as a country faster than we can pay it off. How are we going to pay off those debts? We can always say tax the rich, but that's been done. That's always been happening. And if you do tax the rich, well, the rich just always pass it on down to you anyways, in some way, shape, or form, right? Especially if they're the ones that are employing you. They could always just say, you know what, if I'm going to get taxed that much, I got to downsize all my workforce. And massive layoffs and creating a depression is not popular for the government. That does not get them reelected. So the government officials know better than to just always tax the rich and then have the rich then punish, as a result, not necessarily punish you, but as an almost necessity, they have to tighten the purse strings because they have less cash to deal with. That's why they usually get the tax breaks. Now, I know there's maybe some of you probably want to debate about this, and that's not the point of this, right? My point is this, is that government rules can and will change as time goes on. More importantly, though, I believe, and this could be wrong, but I believe that taxes will likely go up in the future. They will likely go up. To pay off all those debts and everything else they're dealing with, they can't try to tax the rich, but that has bad repercussions on the economy. So then they should go right back to taxing everybody, right? They'll tax a little bit to the rich and they'll tax the middle class and maybe the poor class, maybe not. But they're going to tax to at least the vast majority of Americans, which means your money could be taxed more in the future. So why am I delaying my taxes to a date when I'm going to get taxed more down the road? That means I have zero tax advantage. In fact, I probably have better tax advantage by doing a Roth IRA or a Roth 401k than doing any kind of traditional plan, even a 457 or a 401k. Does that make sense? So if I want to pay less in taxes down the road, I might want to be tax-free today. One option that's tax-free like a Roth, but allows you to put in more money than a Roth does, is whole life insurance. Life insurance in general lets you put in more money. I recommend if you're going to pick any life insurance, and I don't mean like term insurance, which is just death insurance. I'm talking about between whole life and universal life. I prefer whole life. Whole life has guarantees. They're paying pretty nicely right now, even especially with the interest rate environment the way it is. Many of them are paying at least 6% a year, tax-free. So, you put in after-tax dollars going in, grows tax-free, comes out tax-free, allowing you to grow your money faster. This also gives you money accessible that you don't have to wait till 59 and a half. So for many of you that have 401ks, wait until 59 and a half, guess what? You don't have those age limits. So much like your 457, the whole life insurance policy, for example, doesn't have an age either, just like the benefit of the 457. But the nice thing is it grows tax-free, comes out tax-free. So you're actually able to have tax-free income from it, where the 457, unless you have elected as a Roth potentially, which may not actually have that option at all for yourself, well, this is an option that can give you some tax-free income, and it allows you to put in more money than a Roth does. And if the rules do change, good news is you're grandfathered into that contract, where if I was in a Roth IRA, they changed the rules, decided to tax in certain situations, I just have to go with it. I just have to accept whatever the government's willing to give me. Personally, I just don't trust that they're going to do always in my best interest. So that's where I use life insurance to store my money and allow it to grow tax-free. Here's the other thing, is that retirement plans can be good, but I've had so many other videos on this channel where retirement plans haven't always produced income for people, right? You just cannot save enough to get a decent amount of income. This is why I love to invest in income-producing assets. I avoid all the government plans. I don't care about the 457s or the 401ks and IRAs. I don't use those. The reason I don't use them is because I like to get my money working for me right now. And so instead, I use my money to go invest in things like real estate-backed investments, not just rental properties, although I have some of those too, but I could be lending my money to other investors to then get a contractual return from them. I could be doing partnerships. We can go into deals together, whether I'm buying raw land, whether we're buying into apartment buildings, whether we're buying into a franchise like car washes. I could be buying into oil and gas and things like that. I could be investing in all kinds of areas with my money. And so I have this freedom to be able to invest wherever I want, and it generates actual income right now. I don't have to wait into the future. It's kicking off income for me right at this moment. And that is the difference. I had one client where he finally was able to get about 1.2 million in his possession, right? He was able to get that cash liquidated. And as we did, we said, great, good news. Now we can actually invest that. Now his goal was he wanted 120,000 a year or 10,000 a month. Well, the good news is we were able to get that money invested in real estate. This guy's only in his 40s. He's only about 50 years old right now, or just about 50. And so we were able to get this money invested in different places. And the good thing is now that he's actually got an income generating, he had a few decent investments that were better than what we would typically see. But as a result, he was able to see income of about 150 to 200,000 a year from that 1.2 million. So he's able to get that money working harder versus if he had just put that money into a mutual fund based investment, he would then be told to only pull out 3% a year, which would have been 36,000 a year. And then of course, if you have it in typical qualified plans, you might have to pay tax on that too. So you might be pulling, even though you're pulling out 36,000 a year or 3,000 a month, you might only walk away with maybe 20 some odd $100 a month, right? And so he instead now is able to get more than 10,000 a month coming in because we put it into real estate backed investments that have a little bit more certainty behind it and a little bit more ability to make more money. Now, of course, there are no guarantees. There's always risk with whatever investments you do, but that can help me generate much more income, and it has for me as well as many of our clients because they actually got it in real investments that kick off real income. For you, it's not just about growing your money. It's about how does that money actually generate income? That is the real thing that everybody worries about. In fact, that's the one thing that allows you to even take an early retirement. When people say, well, how are you able to retire twice before you were 40? The answer is simply this. I got my money to generate income. That's all it was. I didn't worry about stock markets going up or down, especially when it goes down, then you might wait years for that money to come back again. No, I just want to get my money out working now. And even if I don't need the income today, which obviously I don't now because I have more than enough coming in, I can then reinvest that money and not just compound interest, but I can actually compound my income by growing it faster and faster. All right, so if you like this video, please like, and by the way, don't forget to subscribe to our channel. And if you want to go further down this rabbit hole, watch this next video where we talk about how you can actually generate that retirement income.